Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now. The first number to know this month is $78. That is the price of a barrel of oil as of July 13th, and it's $10 higher than just 1 week earlier, when it had fallen into the ballpark of its late February level of $65. The volatility so far in July just goes to show that improvement on energy costs can quickly be reversed when tensions flare back up and the ceasefire is called into question. That leaves markets of all kinds at the mercy of events in the Middle East. Which brings me to the second number to know right now, the price of a gallon of gas, $3.87 as of July 12th. Gas prices have come down from $4.56 in May, but they haven't fallen by nearly as much as oil prices did. In fact, they've only given up a little less than half of their peak wartime gains. That's in part because it takes time for the shortages caused by the closure of the Strait of Hormuz to ripple through the supply chain down to finished products like gasoline. And unfortunately, consumer-facing retail prices are usually downward sticky because retailers have only weak incentives to slash prices even when their input costs drop. Now, that's a big reason that overall inflation is also not expected to crash back down to 2% anytime soon. Which is a big reason for the next number to know right now, mortgage rates, which hit 6.75% on July 13th, according to Mortgage News Daily. Freddie Mac's weekly survey was a little lower at 6.5% on July 9th before the ceasefire was called back into question. Now, that's not just due to gas prices remaining elevated. Markets are also reacting to hawkish signals from the Federal Reserve now that they have met and revised upward their official expectations for inflation, which has led to a new consensus among Fed watchers that the next move from the Fed will be to hike rather than cut short-term interest rates. Turning to the housing market, the next number to know, 1.103 million. That's how many active listings were on the market nationally at the end of June, according to Realtor.com. Now, that's just above the 1.083 million active listings from June of last year. Put another way, active listings were up just 2% year over year in June. That matches last month's gain, continuing a dramatic slowdown from May of 2025, when inventory was up 32% year over year. And finally, pending listings were up 5% year over year again in June. So even with mortgage rates still elevated, buyer activity has held up better than we might have expected, and inventory is certainly no longer building up. It could be that buyers are responding to this higher level of inventory that we reached, as well as slightly lower prices on active listings in much of the country. If mortgage rates do start to come back down again later this summer, that could actually build on this momentum and lead to some measurable sales growth in the second half of the year. All right, that is all I've got for this month, and thanks as always for watching.